Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Coming to the stock market yesterday, of course, as expected, the market continued to be volatile and continued to be, range bound. That was something new, in fact. Yes, is it not? Because it was stuck in a perfect range. If you could see, if you have seen the chart yesterday, that was something good. We could see the market kind of, sticking to the range. So there was not, though there was volatility, I would say there was not big volatility to kind of kill the traders. So it was kind of an average day for a trader, I would say, yesterday. But then definitely a lot of traders would have moved out of the market because of the major event that was supposed to happen yesterday evening. That was nothing but the Federal Reserve, that is the central bank of US, coming out with their monetary policy. So as expected, the monetary policy did come in line with expectation. In fact, it gave the Federal Reserve has kept the interest rate. They've hiked the interest rate by about 0.25%, which was within expectation. So, in fact, immediately as soon as this announcement came, we could see the US market rallying upwards. But then, after that, if you remember yesterday what we discussed in the podcast, I had told you that if the interest rate hike is about 0.25%, then major development in the market will all depend upon the comments coming in from the Federal Reserve Committee. So after as soon as this 0.25% rate hike was announced, we could see Nasdaq rallying up by almost 400 points yesterday. But then after some time is when the press conference started and Jerome Powell came out and started talking about the monetary policy, and that is where he made out some revelations which kind of spewed the market. And imagine, the entire 400 points gain in Nasdaq just fell back down 400 points. And finally, we could see a Nasdaq closing in the negative. Not only Nasdaq, S&P 500, Dow Jones, all of them closed in the negative yesterday after the comments. That is a hawkish comment that came in from the Federal Reserve and also Janet Yellen, who is equivalent to Nirmala Sitharaman in India. So that is what spewed the market. So what did they say? That is something that we'll understand now. So first thing that he said, yes, they are not stopping at this rate hike. In fact, they are probably going to see one more rate hike in this year. And after which probably next year is where they will think of reducing it, because first thing, the good news I would say is that inflation is seen under the control, and they feel that as per the tool that they are referring to assess the inflation data, they are expecting to see the inflation to cool down to around 3% by end of this year. So that was a good news. But then what they told us, if it does not, they are ready to change their decision and they are ready to increase rate hikes further. So this was one thing that spooked the market. Two, when they were asked on what will happen to banks if they continue to raise interest rates like this. So to that, in fact, Janet Yellen was the one who actually came with the hawkish comment there. What she told was, they are not looking to bail out any bank or shareholders or depositors in event of a bank collapse. So though the Federal Reserve has given support in terms of the monetary part, they are not going to bail out the depositors or even the shareholders. So that is when we could see a lot of selling coming in banking sector, and that led to the fall in Dow and S&P 500. So this is how the markets actually were so volatile in the US yesterday. But one good thing is, I would say, like I told you, it was actually within expectation, but this hawkish comments is what actually gave that volatility and the market fell down. But then I would say that is kind of over. It was more of a knee-jerk reaction or to that event, and now that is probably over because we could see the Dow futures going up this morning. So Dow futures was slightly up this morning when I looked at it, and even SGX Nifty, which was down, is kind of stabilizing. But of course, we might expect a small gap down opening today, and today being the expiry and such news. In fact, Asian markets are mostly positive, I would say. But then, because of Indian market expiry, we will definitely see a lot of volatility today. So I am expecting the market to see a gap down opening, but from there probably we could see a small fall, and from there a sideways to positive movement is what I am expecting for the day. But of course, volatility is going to prevail in the market for now. So this is one thing to be focused at. And apart from that, if you look at, there has been big weakness in IT sector. Infosys and TCS continue to fall yesterday. TCS has its own internal matters after their CEO quit, but along with that, their exposure to BFSI, that is banking and financial sector in the US is another concern. But then this is a passing phase for now, I would say. That's exactly why I am actually doing a SIP mode of investment into these IT companies again. So this is why again, because we have done this earlier, and that is what actually gave us some fruits recently, where we booked some partial profit and came out of it, and now it is time to add them again. Again, remember, I'm not a SEBI registered analyst. I'm just sharing my thoughts and my view on my investment. So this is only for education purpose. So apart from that, if you look at market, as expected, as we had discussed, if you see since Monday, I've been discussing this, that I'm expecting the market to expire within 17,700 to 18,300. So that is going to happen, is what I feel. So I'm expecting the market to close within the same range, and the view remains the same right from the start of the week, and that remains for now also. But however, intraday, because of expiry, there could be huge volatility which can go above and below this. But finally, the expiry might happen within this range is what I'm expecting. However, like I've told you earlier, I'm not doing active trading right now. Just taking a break for some time for allowing the market to settle down, and probably will take some trades from next week. But then again, next week is a short week because of the holiday on next Thursday, and next Thursday's expiry would be preponed to Wednesday. So next expiry, the next week expiry would be on a Wednesday. So we just have about Monday, Tuesday, 2 days before the expiry for next week. And Tuesday being the Nifty expiry next week, again Tuesday would be volatile. So along with all those things, I'm kind of taking a break until the next expiry, that is until Wednesday, and probably the Wednesday is when we'll take a trade for the next week onwards. So that is what I'm planning. By then, of course, our financial year would have finished. So then brand new financial year is what we would be looking at. So for if you look at my personal portfolio for this financial year, if you look at derivatives section, that is where I'm kind of in slightly negative because of all this recent trading experience, market movements. But then I've quite a lot of made up those losses and made some profits by investing in the US. My US investments are doing really good. In fact, one of my stock is Nvidia, which is sitting with almost 94% returns. So that's something doing good in the US market. And apart from that, of course, my investments in Indian market has also given a decent returns. So which overall has made it a positive year for me. So the financial year is closing net positive, but of course for a trading, this was not a great year. So looking forward to next financial year as a next beautiful year for trading. Let's see how things go, and looking forward to some good returns there. So that's it for now. This is Srikanth signing off. Wishing you all the best for today's expiry, and let us catch up tomorrow with more details on what happened in the market in the podcast. But before we leave, do remember to press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. And if you're not a part of a community yet, do join the community with the WhatsApp group link given in the description of this channel. And you could also be a part of the interactive group where you can meet other investors. For that, you will have to send a message to the WhatsApp message number given here on the scroll. So that's it for now. Have a great day. Bye.